Hey everyone, me Kevin here. The Tesla annual shareholder meeting just took place in Austin. In this video, I'm going to break down everything that was discussed. First, we heard the Model 3 became the best-selling premium vehicle sold globally, beating the BMW 3 Series, Mercedes C, and E-Class. Tesla now also believes that the Model Y will become the best-selling vehicle of any kind, not just premium vehicle, of any kind globally, potentially by 2023. If not by next year, 2022. In terms of free cash flow generation has been substantially higher and better than what we've seen in 2017 and 18. In 2017, we obviously had free cash flow losses, and 2018 barely break even. 2019, 2020, and in the last 4 quarters, we've definitely seen that bump up. You can in fact take a look on screen now, and you see this sort of little chart here that was put up. Strong free cash flow generation of just over $4 billion in the last 4 quarters, which is great. Of course, you get a lot of Tesla critics that say, oh, but what about all those vehicle credits and energy credits? Hey, you know, that helps a newer company get off the ground, but Tesla's not going to need those going forward, even though they'll still get them. Elon Musk even mentioned that in 2017 and 18, things look, quote, dicey, but this is now part of Tesla's past. And he says, quote, especially if you multiply unit volume by autonomy and increased efficiency in the factory, the free cash flow is essentially going to explode. And remember, Elon Musk has this projection that we should be able to get to a 30% gross margin, which would be absolutely unheard of in the vehicle manufacturing industry. Right now, gross margin is somewhere without tax credits around 22%. And Elon Musk's goal is to get this to 30%. Elon Musk can tend to have very ambitious goals, but even if without credits we get to 25, 26%, profitability at Tesla just goes absolutely through the roof. By 2025, I expect we should easily be able to hit some number like 28%. In fact, in my projections, where I think a reasonable curve to get to an $1,800 sales price per share target for Tesla, I use a 28% gross margin by 2025. And I think that's very, very reasonable. Then we also heard that Tesla is open to licensing autonomy. He expects that eventually all automotive manufacturers will make battery electric vehicles, and eventually they'll all be autonomous vehicles. And he says that he's open to licensing this because, quote, it will be such a significant lifesaver and preventer of injuries that it would be morally right to license it out to other manufacturers if they'd like to use it, which is wonderful because it's not going to cost Tesla. I mean, it'll cost Tesla a little bit, but I would expect the marginal cost of providing autonomy to other vehicle manufacturers will be virtually zero. There'll probably be some customer service, some adjustments that may need to be made for individual vehicle models. So even if you put in a 10% expense ratio or even 15, 20% expense ratio for autonomy licensing or autonomous vehicle licensing, you're still going to be netting somewhere around 80 to 90 cents on every dollar of autonomy licensing. And if this is something that could be a recurring revenue package or even a one-time upfront payment, I would expect profitability at Tesla to just explode. Because really now, we're not just focused on becoming the largest vehicle manufacturer in the world. We're taking the place of someone like Toyota, but we're actually exponentially increasing our revenue by selling to all the other manufacturers autonomy software. An absolutely incredible opportunity. And especially if we can do this without LiDAR, which so far, it's been working without LiDAR. I'm very impressed. I really think the Neos, the Neos including forward-facing LiDAR is very smart, especially since it actually doesn't look that bad. If you look up, we looked this up this morning in the live stream. There's the Neo ET7. It has forward-facing LiDAR and 2 cameras on the sides. And when you look at the forward-facing LiDAR, it's not horrible. You know, the forward-facing LiDAR, or just surround LiDAR, which they used to be so interested in surround LiDAR, was pretty ugly with those domes on the roof that spin around. Take a look at this picture of forward-facing LiDAR here on the ET7. It's not bad. It's just sort of like a little hump there. Cameras on the side. Tesla has those cameras on more the sides rather than the top there, which it looks like you might actually have these on the side here as well. But anyway, hey, I mean, I get it. The car's certainly sleeker without those humps there. Hey, if you could do without, great. Keep it up, Elon. So Elon is focused on ongoing cost reduction. Oh, look at that. He's actually talking about margin here, average selling price versus a gross margin expectation. And so they gave a forecast here. Actually, this is not a forecast. This is going, this is sort of looking backwards. This is showing gross margin slowly moving up, and now this is with, oh, I'm sorry, they wrote gross margin excluding credits. That's good. Excluding credits, they're actually showing that in the first half of 2021, they're coming in just above 24%. Very, very good. I said 22% earlier in the video. It looks like the most up-to-date would be just above 24%. And the average selling price for vehicles coming down, but actually not coming down as fast as I personally thought they would. I thought we'd be much closer to $45,000 to $40,000 sooner. And at this pace, we're not falling too quickly, and keep in mind that the second half of 2020 and the first half of 2021 included a significant reduction in the amount of Model S's and Model X's that were actually delivered. So it's worth noting that average selling price per vehicle, especially since prices are going up due to supply shortages, the Model 3 and the Model Y just had a price increase. And we now have the Model S and X revamps selling again at higher prices. We can actually see this bar go up, the gray bar here, rather than go down again, which is great. Obviously, the higher the average selling price per vehicle and the higher the margin, the higher the profitability. So let's see here. Okay, Tesla's goal is to make cars as affordable as possible, but they're seeing cost pressures in the supply chains, so they had to temporarily increase prices on cars. The Model 3 now starts at $42,000 as opposed to that $39,000 for the psychological threshold. On batteries, Tesla is still desperate for batteries and wants to buy as many as possible, they said. As long as they're fairly priced, Musk says, quote, there is no limit to how much they are willing to buy. As much as you can make, we will take. And this is because a lot of folks worry that, oh, if Tesla's trying to make their own batteries, they're going to stop buying batteries from Panasonic. And Elon Musk has repeatedly claimed that, no. We need all the batteries. Like, we're not going to stop working with Panasonic because we're making our own. Tesla prioritizes batteries for vehicles, and then the excess go into Powerwalls and Megapacks. Over time, they do expect demand for stationary storage is going to be at least as high as demand for vehicles. That right there is also bullish for Enphase. Shout out to Enphase, also another battery storage provider. This is because sustainable energy is intermittent. Wind doesn't blow all the time. It's true. You get a lot of solid wind in the early morning hours, like 2 to 6 a.m. And oftentimes solar pretty rigidly between this 11 to 3 p.m. time frame. You're usually looking at about a 4-hour effective time for solar. That's at least when you calculate solar, sort of an average of solar efficacy. You're usually using a 4-hour per day solar calendar. And I know the sun is out more than that, but that's like full-time efficacy you usually use to calculate solar generation. And so obviously you have significant black holes within that time frame. The pillars of a sustainable future are number 1, solar and wind, number 2, stationary batteries, and number 3, electric transportation. He mentions that batteries need to be recyclable, and they are. He says they're basically high-grade ore, which is kind of cool, that batteries have your minerals in it, that it's kind of like, yes, this battery has a lot of high-quality material and mineral in it, rather than a lot of dirt and stuff that we need to filter out. It's actually a really good analogy, and kind of gets me excited about like what Redwood Materials is doing, co-founder of Tesla, running that company, and really ramping up battery production and battery recycling. It's a very good reference. High-grade ore. You can't understate how important that reference is. Very, very important to think of it like that. Really, why go digging for the material when it's in an old battery? Now, in my opinion, we don't have anywhere near the amount of old batteries that we need, so battery recycling is still going to take a while to catch up. But if we're creating a whole new use case for batteries, there are only so many old batteries we can really use. But preparing for good battery recycling, great idea. 5-step, because nobody's going to really want to buy a used battery. Like, you buy a new Model X or a Model Y, are you going to want, a battery from a car that got totaled, but the battery was mostly okay, right? No, that battery needs to be recycled and then rebuilt, essentially. Of course, Elon Musk then also talked about how they are planning to, as quickly as possible, ramp up the cost reductions curve for battery materials, including how they design battery cells, how they manufacture them, the materials they use for the anodes and the cathodes, and of course how they integrate them into vehicles. Remember, Tesla is now going in the direction of using structural battery packs, which means battery swapping doesn't work, and you can't really take the battery out and throw it into another car. You will have to go through battery recycling. So especially with Tesla, we're going to see a lot more of a requirement to have battery recycling, something to think about, especially as Tesla manufactures more cars. Giga Shanghai now exceeds the Fremont factory in terms of production, which is not a surprise. A substantial expansion in Giga Shanghai with a capacity of producing 1 million vehicles a year, which is incredible. Of course, we're not at full capacity yet, although capacity is growing substantially. Increasing Fremont operations and hoping to increase Fremont output by 50%. And remember, all of the S's and X's are made in Fremont. All Tesla factories will be doing battery production soon as well, and Tesla has made great improvements on safety in factories, now 18% safer than other factories. Tesla, big news, moving its headquarters to Austin, Texas, not leaving the California Fremont facility, but are definitely moving the executives to Austin, Texas. Remember, housing is less expensive there. You've got longer commute times in California, less so in Texas. And there's a limit to really how much you could scale in the Bay Area. So Austin, Texas has much more of an opportunity to grow and scale. And you don't have to pay state income taxes. So, why pay the state of California when you've got a failed government in California that increases homelessness and worsens our schools the more money they get? Sad. AI Day, sort of an update on AI Day. Musk says that this was important to changing the overall perception of Tesla, which people before considered it a car company. But Elon Musk really wants to mention that Tesla is as much of a software company as it is a hardware company. Questions in the Q&A section. When will the cyber production ramp up happen? Musk has many times struggled to answer this question. Generally, he blows it off. It's not going to be this year. The expectation is that maybe sometime next year we can actually start seeing Cybertruck production and ramping up the semi-truck. But right now he mentions that struggles with shortages this year are the biggest obstacle. If we had 5 extra products, we would not change our vehicle output at all. That's how impacted we are by the supply shortages. It's not just chips, it's everything. Is Tesla thinking about a stock split? Basically, not yet. Remember last time they kind of get motivated when the price was around $1,500? Maybe that'll be another trigger point. 4680 battery production in Texas, not this year, but they're making the 4680s in the pilot plant in California. This is just a few miles away from Fremont. This is known as the Cato facility. And they expect to start Model Y production in Texas this year using structural battery packs in the 4680s. So that gives you a thorough update on what happened with Tesla. If you like this kind of content, make sure to subscribe. Make sure to check out the programs linked down below on Building Your Wealth. Use that coupon code DiamondHands. And folks, we'll see you in the next video. Thanks so much. Goodbye.